Good morning, everyone. This is Ryan Ender with your Tuesday, September 3rd morning wake-up call. We are starting off the week with fairly calm trade. Corn down a penny, beans up 2 cents, wheat down 4. As we go into this week, we should start to expect more yield reports from other tours. Allendale will have our number out here tomorrow morning from our yield survey. We should also expect other groups to put out their yield estimates as well. Some of those will be more locally based, but trade will be in general watching for yield reports, knowing that harvest isn't actually all that far away. In fact, this morning, the 10-day forecast is clear for just about every area that is growing crops. So maybe near the end of this 10-day forecast, we'll start to see combines move in an area that trade will pay even more attention to. So we'll see if that forecast holds up. We'll see if we do get any early harvest reports. But again, for this particular week, most of trade's focus should remain on additional yield estimates that we'll see coming out. Looking over at the funds, they were still short covering corn. They covered 16,000, so a little bit slower than they have before, but still short covering. Beans even slower yet. They were buyers of 6,000 in the beans. And exports have improved in a very big way. We would say exports have needed an improvement for some time. And current levels don't quite suggest a price bounce, especially as we're going into harvest. It's tough to expect exports to rally us when trade is anticipating some pretty sizable yields from once we start hearing combine reports. But the improved exports have stabilized these markets here recently, and we'll want to keep a close eye on those. Last week's bean exports were nothing short of tremendous. So another thing that overnight traders will likely look for is a near daily report of 8 a.m. sales for the beans. So let's keep a day-to-day watch on that. Quickly to mention over in wheat, overseas trade was down again. There were a few doubts about the size of the Russian wheat crop from headlines late last week. So we would say that even though overseas is down, it is not making new lows on the year like it has been doing almost daily. So maybe we're seeing things stabilize, level off there, but a little early to tell just yet, and would assume wheat stays under at least light pressure going forward. Switching over to cattle, box beef was calm Friday. We did have a rough start to the box beef last week where it took a pretty sizable pullback. But then Wednesday, Thursday, and Friday leveled off again. Packer profits going to start this week near $9. So that is over the $7 level that gives you the impression we may have a higher cash trade this week, but just barely over 7. And trade has seemed more cautious lately. So we're back to saying now that we've taken all the panic out of the cattle market that watching box beef is again the number one thing we should be doing here for direction. And knowing that trade is a little on the cautious side, we would also say that watch out for lower box beef moves. If there's a significant downturn in box beef again, we may see a near immediate reaction in futures, and that has also spilled over to cash. So again, just the best to say for cattle, just keep watching box beef. It's at a level that's okay, but not particularly strong right now. So keep a daily watch on that. So that's what we have here for your Tuesday morning. If you have any questions on what you've heard here, give me a call direct at 815-578-6159 or continue to tune in to our morning wake-up calls.